We got Shibani Sarkar joining us. Kunal is also here. And Nooresh is back from his holiday. Nooresh, were you holidaying? You weren't there on the channel a few days. Where were you?
The wedding season kept me busy.
Are fellow Indians spending, splurging on their weddings? What were your observations?
There are so many functions to go through. That's a pain.
Okay, fine. Let's talk about markets and Kunal. There was an intraday dip, but the beauty of bull market reversals are that they get equally bought into. Is this one also bought into in your view?
Yeah, it looks like, and the dip was a lot more shallow than the previous dips for the index. Just about 120 points off for the Nifty. So from 20 to 100, there was a touch and go movement below the 22,000 mark for the Nifty, but I think we've managed to come back quite okay. The only catch with today's sell-off, which was not the case seen in the last two previous corrections, intraday corrections for the index, is that for a moment the Nifty futures went into discount. Now that's the only concerning point for an index trader, because generally when futures reduce their premium or drop down their premium and get into a discount at the start of maybe a corrective wave, that generally is an indication that maybe traders are expecting that this could be a plateaued region or a point where the index can get a lot more plateaued from here on. So if the index premium doesn't improve over the next couple of days, then we may expect that this intraday bout of volatility may continue for the next couple of days, and possibly this 22,000 mark could act as a pivot for the Nifty.
Okay, point taken. Actually, pull up the intraday chart of PNB Housing. Not sure what suddenly happened on that counter, but that surged almost 10%. So let's take a look at that one. Definitely building on volumes as well as the price right now. And of course, Capri Global has been trending higher throughout the trading session. And as Ajay was pointing out, it's the metals pack, not just the frontline names, but take a look at a Maharashtra Seamless. That's perking up. SAIL is also higher. NMDC and a lot many other names from the metal packs are fairly excited. Nooresh, if I can come to you quickly on the charts of PNB Housing, if you can explain the move to us there, and from the metals pack, which is the chart that looks the strongest.
So PNB Housing has given a breakout, but the fact is it has moved up really fast. Not expected to fire up to 8 to 10% in the day. But the trend is strong. The stock is back to the prices where it was in 2021. So positive. Any dips back to 850 odd levels would be a buying opportunity. 850 to 830 zones. In terms of metals, the trend has been strong, but names like Nalco, SAIL become difficult to trade given that they keep going into the derivative band. But NMDC remains one of the better names. We've seen mining plays do better than the steel and aluminium names. So NMDC corrected from 225 odd to 210 odd levels, has started making a recovery. So NMDC is the first pick. Secondly would be Jindal Steel, which is now getting close again to a new all-time high. Close to a flag breakout above 755, 760 levels. So this would be the two top bets in the metal trade.
So Shibani, I want to understand your thought process on metal counters. Steel as well as say Hindalco, Nalco, etc. I was talking to one of your fellow fund managers when I asked him what are your thoughts on metal counters here, and he said, which metal counters? We are just converters. We are not really metal and mining companies the way there are globally, right? So, I mean, he was presenting a contra view of being bullish on it, but the general view is that with China and US being in such shape, weak economic shape, the metal sector may not do well. Where do you stand on metal?
Hi, good afternoon. So on metals, we have been cautious and we have been underweight on the sector. As you are rightly pointing out, the sector is prone to very high cyclicality, and a lot depends on how global demand really pans out. Now, while we have been, getting this news flow of the possibility of some sort of stimulus to improve demand in China, that has not really come through. And post the opening up, what we have seen is clearly demand from China has been weak. One of the biggest segments that contributes to global demand, especially for steel, is the housing sector. And our belief is that at this point in time, the housing sector weakness in China continues. And from that perspective, if you look at the demand supply imbalance at this point, and given that global demand remains muted, we believe that metals in the near term will see cyclicality and will see pressure, especially in terms of pricing. Now, within the ferrous and the non-ferrous pack, if you take a slightly longer term structural view and look at demand supply dynamics, non-ferrous does appear to be somewhat better than ferrous. But overall, in our portfolios for commodities and metals as a pack, we continue to remain cautious and underweight, given that there is still no visibility of demand recovery globally.
sector which is coming under pressure today is this entire stock market intermediaries. Case in point being Angel One, which is of course a result reaction coming in. But take a look at Nuvama Wealth Management as well. That's taken a knock. Motilal Oswal is actually trending lower. And a lot many names from these segments are actually on the downside. Shibani, you are very close to this sector as well. Talk to me how this entire financialization of savings and the stock market related names, whether a CDSL, whether a KFIN and Prudent of the world, there are a lot of ways to play this. But what's your take as to which are the top bets that one should look at in this sector?
Without getting into specific names within the space, what we have seen structurally is that the trend of financialization of savings in India has seen improvement, but we still have a long way to go, given that penetration levels are still fairly low. So across the board, our belief is that the runway for growth and penetration means that their opportunity set in the medium to long term remains fairly intact. However, given the fact that markets have seen this sharp up move and therefore the capital market related plays have also seen a similar sort of movement, one should also therefore be mindful of valuations in the near term. And it's possible that, given the kind of up move and the valuations that some of these entities are trading at today, there could be some degree of consolidation. But the longer term structural theme of under penetration, financialization of savings, and also maybe to some extent shift in market share in segments such as brokerages, for instance, where there is consolidation taking place, means that this over the medium to long term, this could be a structural theme that stays intact.
There's a very interesting note by a brokerage today taking examples of some of the companies they think actually could be the first $1 trillion company in market cap in India. It talks about a large private sector bank. It talks about an energy to financial services conglomerate. It talks about a pure consumer lending company based out of Pune and a few others. Because it's a 7-year view, I'm taking a liberty that, to talk about companies which you think can classify to reach the $1 trillion market cap in the next, 8 years actually, 8 years. Or do you, if you still don't wish to talk about names, then can you tell us the nature? Will it be a bank? Will it be a large NBFC or a energy-led conglomerate? What do you think will be the first $1 trillion MCAP company in India?
So I think interesting question. In my view, as we were discussing in the previous question, in terms of financialization of savings, there are a few key things that we believe that is very, very structural from a financial services perspective, and therefore it is very possible that this is a sector which, from a medium to long term, could see a significant creation of market capitalization, without, of course, going into particular names. A few things that we see, if you look at penetration levels, even in terms of credit to GDP ratios, penetration levels, in terms of the various financial services plays that are there, the very fact that we still remain fairly underpenetrated means that there is a long runway for growth. Secondly, what we have seen is in this sector, with use of technology, there is also significant operating efficiencies that are coming into play. We are also, in our belief, at the cusp of start of a private sector capex cycle, which should also bode well for long-term loan growth where the sector is concerned. And therefore, if you take a view of, say, over the next decade or so, financial services, banking as a space is something that will possibly be a sector, a thematic sector to look out for over the next decade.
Point taken. Just going back in terms of which are the stocks which are actually slipping in the trading session, CE Infosystems just came out with its earnings. Looks like the street is not very excited by the performance that the company has reported, because that's taking a bit of a slide. Let's pull up the stock of CE Infosystems, because that stock is taking a bit of a knock. You also have Jubilant Life, Jubilant Ingrevia, Federal Bank. These are some of the counters which are slipping in the trading session. In fact, just going back to that City note, Kunal, there's a very interesting move that they have done in terms of the 90-day catalyst watch that they've opened. It's a negative catalyst watch on SBI. They're expecting a bit of a downside there, and Federal Bank has been downgraded. But if you look at the charts, what does it suggest? Is SBI looking weak for the next, let's say, 60 days?
No, in fact, my belief is that many of these PSU banking stocks, the mid-cap end specifically, is getting ripe for a breakout. Now, see, what could happen is that maybe SBI may not perform, or it could remain sideways. Charts are so far not weak. The stock has gone through its own time-wise correction, I think the December high for the stock was around 660 mark. The recent low was around 620. So it's gone through its own patch of correction / consolidation. Now with the entire gamut of the PSU banking names, the mid caps and the small caps, specifically the two-digit stocks, they are the ones which are looking attractive for a breakout. Many of them have seen volume participation. So I believe that possibly SBI can also see maybe a slight comeback, maybe towards 650, 660 mark. But in case if the stock actually dips down to that 620 levels, if it happens in the next couple of days, I think that's going to be a very good buying opportunity from a contra perspective.
Okay, point noted. So at least on the charts, it's not looking weak. In fact, a lot of mid-cap PSUs might be something that might come back into flavor. But time now to slip into a very short break. Don't go anywhere.
Okay, back with our panelists to discuss. There's some recovery on an intraday basis being attempted. Let's see where we end the day. Shibani, what are your thoughts on the way QSR stocks are doing last few months? And after they went through a very bad patch. But what I observed, Shibani, was that be it Devyani, Restaurant Brands Asia, or some others as well, they may have gone through a weak patch in their growth, but they did not slow down their store count addition in a very meaningful manner. In fact, they pressed against it, right? Is it right to assume that this was a temporary weak patch and in the structural story for QSR in India is still intact?
Yeah, so I'm of the camp which believes that the structural story for QSR in India is indeed intact. However, what we have seen is that overall there has been some amount of slowdown that we have seen where discretionary spends are concerned. Also, we went through in the last quarter two large events that were there, especially with the World Cup in play. And therefore, a lot of while, on one hand, there was improvement where food deliveries were concerned, the in restaurant dining had taken an impact. So overall, what we have been seeing is the outcome of slowdown where discretionary spends are concerned, especially at the mass rural or the tier 2 kind of segments, which has impacted these QSR players. However, from a structural perspective, what we believe is that over maybe the next few years, the entire penetration levels, as we at least try to move down the curve, especially where tier 2, tier 3 cities are concerned, the structural story is intact. And therefore, obviously keeping valuations in mind, one could possibly look at some of these, this particular sector. One factor that we must note is that while there is signs of improvement at the mass or at the discretionary spends level, the signs of improvement are extremely muted. So it's not a V-shaped recovery that is taking place. So it's going to be a slow and steady recovery. And therefore, one would have to be patient where this entire sector is concerned.
Patient, that's what you'll have to be in the QSR space. But the nature of the gains on the IPO market have also changed quite a bit. Just a couple of months ago, we were seeing surge of 50, 100% on the listing itself. Now, listing is a bit more tempered and the actual gains happen post that. Case in point being, Jyoti CNC, it listed at the price of 372 versus the issue price of 331. But now that stock is surging and we are seeing that trading around 437. We'll discuss that more, but first listen into what the management had to tell us about the future, because from a 15 crore profitability, what they delivered in FY23, they are right to grow their business on a multifold basis, and that's why the overall profitability is also expected to jump going forward. On the valuations as well, the stock is pretty much in line to slightly cheaper.
So what will happen is that, okay, let's hear out the management. We'll come back and tell you what exactly is happening in that story.
See the going. So based on this, our order book today, our EMS orders are close to 8%, and aerospace and defense are close to 58% in our order book. In terms of a revenue, in terms of execution, we are looking to be a close to 40% is going to be aerospace and defense, and it is going to be balanced between the three things are like that: auto components, EMS, and aerospace and defense there.
Rajkot-based company believes that in the next coming years, the profitability of the company can grow many folds, and that is why one section of the street saw value in it. On listing, they started buying, and from almost 370 odd, we're talking about 470. But what is also happening, Anisha, is that this entire, actually Azad Engineering broke the, the speculator HNI's romance with grey market. Because when you take a position in a grey market and the grey market plus the issue price position doesn't go up, and then there's a loss which the investor actually makes. And there was a massive one in Azad Engineering. And after that, people are not participating a whole lot in grey market. They want the stock to list, then work the numbers and see. Similarly, Credo and even RBZ actually saw hardly any action in grey market, but after that the action. So this is good actually, one takes a more informed call. But I'd like to talk to you about another stock, Nooresh, because you track small caps clearly. Power Mech. This is also the same Rajkot based CNC company, and there was a big run up in Power Mech at the time when this company was doing road shows and all, the Jyoti CNC stock. Power Mech is 25% in 3 months at 4,900 odd. How do you look at the charts of this one?
So technically the stock is positive. If you look at the previous all-time highs, the stock made in August was closer to 5,000, 5,100. Then for the last 3-4 months, the high was around 4,600 to 4,800 levels. So we've crossed above that. The momentum is strong. The only case is one will have to keep a deeper stop loss at 4,600. So sustaining that 5,000, 5,100 mark would imply an all-time high. So in that case, it could see further momentum. Just that you would want to buy it on a dip. At current levels, the risk reward is not as great.
Reward is not as great for Power Mech, but do remember the stock has run up 22% within 3 months itself. Kunal, I want your view on the charts of ITC as well as LIC, because LIC is now getting very close to that issue price of around 910 bucks, or closer to that level, whatever it was, because there was some discount for employees, etc. as well. But what's your take on LIC and ITC?
I think for LIC specifically, I think it's an exceptional jump of volumes. And from that 600 mark or sub 600 levels, you look at the average volume texture. It's almost like on an average, we've seen volumes for LIC on daily basis to be around 50 lakhs to 60 lakhs on the NSE. And the volumes prior to that was 5 lakhs, 4 lakhs for LIC. And I'm talking of it for weeks when the stock was below that 600 mark or at that 550 level. So that itself tells you the change of stance which has happened for LIC, and especially that pushback from that 600 levels towards a point when the stock is almost at this 900 mark. Today's move specifically for LIC, again on exceptional volumes, almost 1.15 CR of volumes today for the stock on the daily charts on the NSE itself indicates that this is a strong volume back move. And we've seen this phenomena for PSU names, that whenever the move has been backed by volumes, whether it's the likes of PFC, REC, of course, different sectors altogether, but then these moves sustain, they build, and then they eventually go into multi-month, multi-year uptrend. So of course the chart patterns for LIC chart history is limited, so difficult to forecast from a longer term play, but at least looking at the last 3-4 months of charts, expecting that the next 2-3 months the stock should be at least scaling past about the 4-digit levels.
Wow, finally the investors would be really happy to hear 1,000 rupees mark. For the longest time, the people who invested in the IPO were sitting in huge losses. They're still in losses, and a lot of them have actually thrown in the towel, sold at a loss, but finally, I mean, it seems like it's breaking out.
Well, yeah, I mean, but you can mark it last 2-3 months, the commentary from Deepam's side and even from the LIC that they want to do a YONO kind of an app.
Correct.
Like SBI, and a lot of efficiency related commentary coming in. That's exactly where it bottomed out. But talking of bottoming out, Kunal, there's one stock I want to discuss with you, which appears to be breaking out. At the start of the show, we were offline discussing about it, now 11%. Pratap Snacks. What's happening there? Have they found out or about to launch some specialized variety of
Some new
snacks?
chakna and masala coming
Some chakna and masala, because the street is saying cheers almost on a daily basis.
Well, the last 3 weeks of data suggests that there's something new which is happening to the stock. Again, very good volume price move for Pratap Snacks. The stock, I think, from 900 levels in the last 3 weeks moved up back towards the 1200, 1250 mark. Still off from the previous highs, 1458, 1460 is the, I think, 2018-19 high for Pratap Snacks. But just looking at the last 3 weeks of price action move, I would believe that 1400 should be in the making for the stock.
Okay, so 1400 was, this is a troubled company which is trying to attempt a comeback. Shibani, have you looked at this category, not the stock, but there's another one, BKG, which trades at much higher valuation than this one. There's another Gopal Snacks, which is in the IPO almost in a month's time. I want to understand the representation, for the snack market is only increasing on the street. Have you looked at this category? Any thoughts?
Yeah, so this category is an interesting category, as you rightly said that the market size for this is increasing, and again, given the fact that the consumer sentiment and behavior has also been changing, this is a category which again shows runway for growth. Unfortunately, again, I will not be able to comment on specific names, and it's a pretty small category per se in terms of its representation in the listed universe. But when you look at the segment, one has to look at it vis-a-vis growth as well as valuations. And in pockets, valuations may be stretched, and therefore one has to keep that in mind. But again, as a category, it is an interesting space, and we do believe that the runway for growth in this category is fairly strong.
Runway of growth is fairly strong. On that note, we'll let you go, Shibani. Thanks so much for making time and speaking with us.